Question. Accounting provides data or information on options: income and cost for the managers, financial conditions of the institution, company's tax liability for a particular year, all the above. All the above. Long-term assets without any physical existence but possessing a value are called intangible assets, fixed assets, current assets, investments. Intangible assets. The assets that can be easily converted into cash within a short period, that is 1 year or less, are known as current assets, fixed assets, intangible assets, investments. Current assets. Copyrights, patents and trademarks are examples of options: current assets, fixed assets, intangible assets, investments. Intangible assets. The debts which are to be repaid within a short period, that is a year or less, are referred to as current liabilities, fixed liabilities, contingent liabilities, all the above. Current liabilities. Gross profit is options: cost of goods sold plus opening stock, sales minus cost of goods sold, sales minus purchases, net profit minus expenses. Sales minus cost of goods sold. Net profit is calculated in which of the following account: profit and loss account, balance sheet, trial balance, trading account. Profit and loss account. In order to find out the value of the closing stock during the end of the financial year, we options: do this by stock taking, deduct the cost of goods sold from sales, deduct opening stock from the cost of goods sold, look in the stock account. Do this by stock taking. Which of these best explains fixed assets? Are bought to be used in the business, are expensive items bought for the business, are items which will not wear out quickly, are of long life and are not purchased specifically for resale. Are of long life and are not purchased specifically for resale. The charges of placing commodities into a saleable condition should be charged to trading account, profit and loss account, balance sheet, none of the above. Profit and loss account. Suppliers' personal account are seen in the sales ledger, nominal ledger, purchases ledger, general ledger. Purchases ledger. If you want to ensure that your money will be secure if checks sent are wasted in the post, you should options: always pay by cash, cross your checks, account payee only, not negotiable. Always get the money in person, not use the postal service in future. Cross your checks, account payee only, not negotiable. Discount received are options: buyer of goods granted discount by seller, deducted when we receive cash, given by us when we sell goods on credit, none of these. Buyer of goods granted discount by seller. Sales invoices are first entered in the cash book, the purchases journal, the sales journal, the sales account. The sales journal. Entered in the purchase journal are discount received, purchases invoices, payments to suppliers, trade discounts. Purchases invoices. At the balance sheet date, the balance on the accumulated provision for depreciation account is options: simply deducted from the asset in the balance sheet, transferred to profit and loss account, transferred to the asset account, transferred to the depreciation account. Simply deducted from the asset in the balance sheet. If we take goods for own use, we should debit drawings account, credit purchases account, debit drawings account, credit stock account, debit sales account, credit stock account, debit purchases account, credit drawings account. Debit drawings account, credit purchases account. When a petty cash book is kept, there will be options: no entries made at all in the general ledger for items paid by petty cash, the same number of entries in the general ledger, fewer entries made in the general ledger, more entries made in the general ledger. Fewer entries made in the general ledger. If a trial balance totals do not agree, the difference must be entered in the profit and loss account, a nominal account, the capital account, a suspense account. A suspense account. If it is required to maintain fixed capitals, then the partners' shares of profits must be credited to capital accounts, debited to capital accounts, debited to partners' current accounts, credited to partners' current accounts. Credited to partners' current account. A business has the following balances: asset rupees 1,20,000, liabilities rupees 50,000. What is the capital? 50,000, 70,000, 1,20,000, 1,70,000. Rupees 70,000. If an asset is purchased rupees 10,000 and depreciated over 5 years using the straight line method, what is the annual depreciation expenses? Option: rupees 1000, rupees 1500, rupees 2000, rupees 2500. Rupees 2000. Which of the following would be recorded as a liability in the statement of financial position? Options: wages outstanding, prepaid rent, accrued income, depreciation. Wages outstanding. Which of the following best describes the accrual concept? Revenue is recorded only when cash is received. Expenses are recorded when paid. Revenues and expenses are recognized when earned or incurred, not when cash changes hands. Only material amounts should be recorded. Revenues and expenses are recognized when earned or incurred, not when cash changes hands. A trial balance is used to forecast future profit, detect errors in recording transactions, prepare bank reconciliations, record daily transactions. Detect errors in recording transactions. Gross book value of fixed assets is its cost less depreciation, historical cost, fair market value, realizable value. Historical cost. A credit entry in a real account means a decrease of an expense, a decrease in value of an asset, an increase in an income, an increase in the value of an asset. A decrease in value of an asset. Contingent liabilities appear in the balance sheet, chairman's report, shareholders' notice, notes on account to balance sheet. Notes on account to balance sheet. The main objective of bookkeeping is to: options: find out profit or loss, keep correct and complete record of business transactions, show the correct position of assets and liabilities, examine the accuracy of business transactions. Keep correct and complete record of business transactions. Life insurance premiums received by an insurance company should be classified as accrued asset, accrued liability, prepaid expense, unearned revenue. Unearned revenue. The basic accounting equation is stockholders' equity equal to assets minus liability, profits is equal to revenue minus cost, assets equal to liabilities minus stockholders' equity, net worth equal to assets plus liabilities. Stockholders' equity equal to assets minus liabilities. Trial balance should always tally due to the rule of all transactions are transferred to the trial balance in the end. Every debit has a corresponding credit. Assets and liabilities are equal. Income and expenses have credit and debit balances. Every debit has a corresponding credit. Debit what comes in and credit what goes out is the rule of personal account, real account, nominal account, assets account. Real account. The time gap between the payment for raw material purchases and collection of cash from sales is referred as the option cash cycle, operating cycle for the company, both A and B, none of the above. Cash cycle. Which one of the following is a real account? Salary account, Mr. Ram's account, building account, interest expense account. Building account.